Yeah, we are here for the third installment in our Master Trading series. And my name is Charlie Bathgate. I'm the CEO of our operations here at Sang Lucci Trading. And I'm joined by Wall Street Jesus today. Jay, say what's up to everybody.
What's up, everybody?
And, you know, usually Jay is out here giving analysis of flow and market dynamics at the moment, and you know, hosting his show, the Flow Show, which you can usually see every Tuesdays. And we're peeling away from that, and we're putting him in, you know, the hot seat, the interview seat, as part of this series to continue discussing what the journey from going from a new trader to a professional trader entails. That looks different for everybody. And part of what we've done and what we're doing in this series is bringing on our professionals, our expert traders, our educators, and talking to them about their experience, what they've gone through, what they had to go through when they started out up to where they're at right now. So really going into their individual experiences, but then also talking about what they have observed during their time amongst other people, you know, with other pros that they've worked with, personality traits, characteristics that they feel like are essential to make it in this game on a professional level. So we're going to keep going with that. If you guys missed the first two episodes in the series, you can go to our YouTube channel and check those out. We started out with an interview with Lucci in the first one, which was great. And the second one was with Chris Cady, which was also awesome. So this is the third one. And then we have two more coming after this. So Jay, you're right smack dab in the middle. Let's start out and let's talk about your personal experience coming up. I think a lot of the people who are in here probably know your sort of like basic origin story, how you got started and stuff. But I think some people might not know the fact that your like first introduction to making money professionally in any sort of market or by taking on any sort of risk was via professional gambling, right? I mean, that was the world that you sort of came up in and that you observed growing up. Can you talk a little bit about what that was like for you? Like when you first started realizing like, whoa, people are they're not just like throwing money at horses randomly. Like they're doing this for real. They're doing this professionally. They have some sort of edge.
So I was brought up just around gambling and gamblers. My father was a pretty big gambler. Wasn't a professional gambler. He basically donated his money constantly, you know. There would be times where he'd lose, you know, 30 to 50 grand in a night, and he'd have a smile on his face, and you would thought, you know, he won 50 grand. Like the money wasn't even the issue. He just loved the thrill. You know what I mean? He loved
the action.
Yeah, on a Wednesday night in baseball, he'd bet the whole card every game. Like call up the bookmaker and say, you know, give me all the dogs for a dime. Meaning, give me every underdog for $1,000 on a Wednesday night. You know, so I was brought up from like really, really young. Used to take me to the track. I used to spend summers in Jersey, Monmouth Race Park. So that was my upbringing. And interestingly enough, though, and this was the strangest thing, because he was like a degenerate, compulsive gambler, but he was around a lot of professional gamblers who never worked a day in their life. You know, guys that just would go to the track every day with their racing form, eat, you know, meal, a good lunch, dinner there, and sometimes not even bet a race. You know what I mean? That discipline, where my father was, you know, every single race, he had to try to find a way to make money. These guys would just chill there and wait for their opportunity when they had an edge. And that's where they would put their money. So being around a lot of these people, I got to see something I never knew existed. You know what I mean? I saw both sides. I saw the degenerate gambling side that did it for the action, right? Or almost for the enjoyment. Almost knew they were never going to make money. They didn't stand a chance. But then I also saw the other side of that fence, the professional crowd and what it took for them to be successful and how they made money. You know what I mean?
Right.
So like I said, being around that younger, I had that knowledge and experience. And coming out of school, I really, I just didn't know what I wanted to do with my life. So the first thing I was going to attempt, and it probably wasn't going to end up, I wasn't going to end up being successful, but I had to attempt it anyway, was to go that professional gambler route, right? So that's what I wanted to try to do. I knew what discipline it would take. The question would be whether I would have the edge to, add it with that discipline and find a way to become profitable and do that for a living.
Right.
And then, out of nowhere, the way I was introduced to the market, how the market fit into the whole equation, I never, the market wasn't a big thing. I knew of the market. I knew of stocks, but I never really traded or anything else at a young age. A friend of mine took me on an interview to a brokerage firm. And that's where I was first introduced.
And this is like you're still a year or so out of college or out of school,
right,
or
what? Right out of college, basically.
Yeah.
Right out of college. So
you're like 23 or something.
Yeah, actually even younger than that. So I might have still been in college when I went on the interview. But anyway, He took me on an interview because he was doing the same thing, trying to figure out what he was going to do with his life. And I loved it. I just, I loved the energy. It was just basically, I felt like I was in a casino. I felt like I was at the craps table in Vegas.
Were you at the floor, and like where was the interview?
At the time, the firm initially that I went to was some bucket shop. Okay, so straight up chop shop, bucket shop. We went on an interview. We opened the doors. There's a boardroom, at least 100 brokers on the phone, screaming, cheering.
Right.
It was the most amazing thing I've ever seen in my life. So right there and then, I fell in love with it. You know what I mean? Right. I fell in love with it to at least pursue it. So I put everything else that I was even thinking about doing on hold. And I started working there with him. And make a long story short, I didn't stay that long at this bucket shop. It kind of was obvious that what they were doing there was, not legit. But I went to, some mediocre firms, legitimate firms, got my Series 7 license, 63 license, right? So I got my licenses and, built a book and managed clients. So that's, like Lucci came through, right? The trader, what they call it again? Prop shop?
Prop shop. Yeah, the
prop shop, right? And a lot of people come through that. I didn't initially, it wasn't my money that I was risking, which I thought was a huge asset. You know what I mean? I basically had to be a salesman. I had to get client money who believed in what I was telling them, right? The picture I was painting, and I would risk their money to try to make money. So that's how I dabbled in the market. That's how I got introduced to the market. But along the way, learned a lot of things just by being around others who were doing the same that I was doing, more of what not to do than what to do. You know what I mean? And then when I obviously fast forward, when I felt I was comfortable enough risking my own money, I would place bets along with my clients. There were restrictions around it, as far as selling and stuff like that, but I would risk my own money. But yeah, that's how I got into it. A little different than a lot of the traders who come in, risking their own money with firm money, right? Trading on their own. It wasn't that active trading. It was more of people say investing, but it was more of placing bets. You know what I mean? Placing bets on names. And if I made money for the client, I would take a piece. So that's how, I would make any notable amount of money, put it that way.
Yeah. I mean, it's fascinating. You talk to 10 different traders and every one of them has a different, you got 10 different stories of how they got started. There's so many different ways into this. And I feel like 10, 15, 20 years ago, there were even more ways into the industry, whereas I think a lot of those have sort of narrowed now. But when you think back at, you were saying you got to watch those professional gamblers, you got to watch what made them successful. Do you think that there's anything that they did that you consciously brought into trading with you when you started trading? Is there anything that they were doing that you said, okay, I need to emulate this, I need to do this in my trading?
Yeah, without a doubt, not even just emulating, just making allowing me to see the light in just the whole game in itself. Like, everybody, I think this is a big problem amongst newer traders. It was for me, it was, for almost everybody in this game. Everybody's fixated on, what they're wagering on now. You know what I mean? Like, what is this stock going to work out? Am I going to make money? Finding reasons why they're already in the stock, but finding more reasons why they should be bullish. They already placed their bet, but they're still digging up more reasons to build their confidence and their bias and why they should hold it. Where watching the professional gambling crowd, it was completely different. Every bet was just a bet. There, they already understood.
No
that.
Emotional attachment.
Right.
No,
they understood, like, they had no control. One of these bets, they're gonna lose their money. They already understood that before even placing the bet. Like, this may be a loser, right? It's not going to change anything as far as my edge is concerned, big picture or in the long run. But there's going to be losers. But they had the confidence, the conviction that if they just continued to do what they were doing, that net, they were going to be profitable. You understand? Like, and a lot of new traders, I mean, that's the total opposite. What that first bet does almost, either builds confidence or deters confidence from that player instantly, right? Like, I see a lot of time people who come into the steam room. If the first trade or the first couple trades they place off the steam room are profitable, oh, this is great. This is, I think I found this, blah, 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 right? And then what happens is, they run into a couple losers and reality comes into play. Where on the opposite side of that, people who, new signups will come in and they'll lose money off their first bet. And they think, this is the same shit, right? So it's that mentality that allowed me to, it's just allow reality to set in. I gave myself a legitimate chance to see if I had any real edge, where a lot of people don't do that. And I think that was the number one thing coming out of that professional gambling crowd that really stuck with me. They would it was just another bet. It was a business. They make money tonight, lose money. They knew they were going to hit at a 65% clip. And if they manage their bankroll properly, they're going to make money. There's no question about it, So they always had their eyes on the bigger picture and didn't get wrapped up into, the individual excitement of it all. I'll give you an example. My father, Joe, it was excitement right there. He needed that excitement from that game. You understand? He wanted to bet the televised games because they were on TV, So he was that sick of a gambler that, like, if his professional gambler buddy gave him a hot game, okay, and it wasn't televised, he couldn't just bet that game that he had an edge in. He would have to bet the televised games with it so he can watch it. You know what I mean? And you see that in the market all the time.
Yeah. Well, I mean, look, what you're bringing up is people, I think professionals have had the conversation with themselves where they've answered the question, why am I actually doing this? What am I really doing this for? And pros are saying, this is my living. I'm doing this to make a living, to make money, and for some of them have deeper, incentives in that or drives in that. They want to go deeper into the markets and understand, how they're working and the sense of competition, stuff like that. But for the most part, they're saying, like, I'm here to make the living. Whereas people are doing this as a hobby, people are doing an entertainment. They're just like, at the end of the day, I'm doing this for fun. As serious as they might take it, as much time as they put into it, they're actually doing it as a distraction, as a way to not have to go home and whatever, talk to their spouse.
It's a game, almost like fantasy sports or gambling on the ball games like we do. You know what I mean?
Right.
So
exactly.
It's understanding that, like, if you go and ask, a lot of people will say that they want to do this professionally and that's what they're looking to do, or aspire to do, but that they're not telling you the truth. You know what I mean? They like the enjoyment. They want to play Apple, Facebook, Tesla every day if they could, because it's fun. You know what I mean? They're popular names. My friends are talking about them. The steam room's talking about, instead of saying, oh, I'm going to wait for that special situation and be patient. there's not a lot of enjoyment in doing that. You know what I mean?
Right.
There's not a lot of enjoyment in doing that. So
Right.
it's tough to do both things. It's nearly impossible. But you're right. A lot of people have to ask themselves and be honest with themselves initially. What am I doing here? Am I doing this on the side? I want to make money, of course, but I enjoy doing it. I enjoy doing it. I'm not looking to do this professionally. It's not going to make or break my livelihood, my life, right? Or is this something, I want to rely on eventually, and not do any other work, right? So it's something you have
Which
to
is not to say like if you do it as well, I guess I'll ask you the question. Do you think if you do it professionally, the trading necessarily has to be less enjoyable?
If you do it professionally, it's less enjoyable for the main reason, like what I just told you. Like, if it's hard, it's impossible to have an edge in Apple or Tesla every single day, every single week, every single month. It's impossible. But there are people who really love to trade these names and play them actively. So obviously, it's not as much enjoyment because there's a lot of patience in it, right? It takes a lot of discipline in waiting for those opportunities, right? When everybody's high-fiving, you see other people talking about how much money they made, and you're sitting in cash because your edge is telling you to sit in cash. There's not much enjoyment in that. You know what I mean? It's like that fear of missing out. So it without a doubt is less enjoyable. I'm not going to say it's not enjoyable at all. We all enjoy the game, but it's a lot less enjoyable without a doubt.
Right. Okay. So then you were talking about being, working as a broker and just understand like that, affording you the opportunity to just understand how markets worked, why names moved, how to get in on trades and catch momentum. Was there what are the what are the lessons that you kind of took out of that experience that you think helped you as you transitioned into trading independently and eventually going off on your own? Was there anything that you learned in the early days of being a broker? You're just like, okay, this is a light bulb moment. This is how this game works.
There were so many light bulbs, but even more on the what not to do side. You know what I mean? That luckily I paid attention to, and unfortunately I would see others blow up around me because of it, but it really hit home with me that I needed to avoid doing it because I just saw right in front of my eyes what happens if you do, right? So like one big thing back then, maybe not as popular now because of options blowing up and being as popular as they are, margin, okay? Like that was one of my cardinal rules early on, that it didn't take long for me to understand not to be on margin to survive in this game, okay? Because that's where, here you talk about greed and how greed kills a lot of people in this game. Everybody I saw blow up around me was literally margin to the hilt on margin, okay? And for those of you who may not even be familiar with that, in other words, you put up 50% of the capital, you're borrowing the other 50%. Now there's crazy leverage, but then that's what it was, okay? And it was all fine and dandy. When the market went up, they were playing all the bigger names, all the bigger tech names, internet names, and they were making a killing.
And they look like geniuses, and they probably think they're geniuses.
Everybody was envious of them. Oh, look at their account. I can't believe it. What am I? Why am I not doing this? But then the first time that market took a real dip and they started getting margin calls, they would blow up their book. So all the money they made, poof, would go up in literally just one little downdraft, And, it was just so easy for me. And you guys know I'm no smarter than the next guy. I'm just a regular guy. But it was just common sense to me. Like, if you want to survive in this game, right? If you're looking for longevity in this game, you want to do this professionally, or you want to find success, why the fuck would you do this, right? Why would you do this? You see everybody blowing up around you. You know this is something you have to avoid. And just something simple like that kept me alive. You know what I mean? Kept me in the game long enough where you learn other things by accident, just from experience. you know? So unfortunately, others didn't have that luxury because they would blow themselves up. You know, they would owe the firm money and just leave the game because of it. So that was just one example of, something that really, hit home with me as far as not doing. In other words, to hang around long enough and try to find a way to succeed in this game. Another thing, and I know a lot of people don't like to hear this, okay, was shorting. You know what I mean? I came to the conclusion early enough in my career, that if I avoided two things, okay, going on margin and shorting, okay, I'm not talking about puts in this, I'm talking about shorting equity, okay.
Mm-hmm. Mm-hmm.
I shouldn't blow up an account, okay. I shouldn't blow up my clients. There was no logical reason why I should, blow up a book if I avoided margin and shorting equity. Okay.
Right.
And, you think about like through the 90s, you talk about pain, the raging bull throughout the 90s, it ended badly, but you don't know how many guys around me that just didn't last long because they went short. You know what I mean? Against, the trend, against the market, and just absolutely blew themselves up. All their clients, lawsuits. I mean, you're talking about ruining people's lives and their life, So those two things are one of the reasons I hung around for such a long time. And I think they were the most important because everything else I learned, if I didn't stay away from those two things, I wouldn't have been around long enough to learn.
And I feel like you're one of the things that makes you so good at this is that you're so logical, and you're driven by like the most fundamental, the most important principles. And I feel like what you just articulated is, okay, clearly if I'm going to make it in this, I have to make sure I don't blow up. Rule number one is don't blow up. How do I blow up? Margin and shorting, right? So if I can avoid those two things, then I won't blow up. Then I've accomplished rule number one. I mean, that's essentially what you just articulated, right?
Not blowing up allows you to hang around in this game long enough that just by accident, off experience, you're going to learn more and more. You're going to learn from each and every mistake you make along the way, right? It's going to be a lesson involved. So the longer you hang around, the more the more experience you get, the better you get at it, the more you learn. So obviously it makes sense, right? But and
that means another thing that you're speaking to is you were looking at this from a long-term perspective. You weren't coming in being like, okay, I got 3 months to start making 60 grand, a quarter or whatever. And because I'm getting rid of my day job.
That's such an important point, because I want to, and I'm glad you brought that up because I wanted to make sure I talk about that too. I had a luxury where I did not have to rely on being profitable, okay, to pay my bills. Okay. I was very fortunate to not have to rely on that. Okay. That's a lot of pressure. I think a lot of newer traders put on themselves that really that's an added weight that can destroy you, So I had a different approach where I said, okay, listen, I'm going to give everything I got into this. I'm going to really try to get good at it, almost acting like it's a sport, right? Get better at my craft each and every day. It's something that I wanted to focus on doing, just getting better at what I do, learning more, and give it enough time to where if I do leave and say I couldn't make it in this game, I gave it a legitimate shot. I felt like I gave everything, I gave it enough time for it to work, right? A lot of people who come into this game, they don't have that luxury. A lot of people come into this game thinking that, okay, I got to make money next month, otherwise I'm done. And unfortunately, this game doesn't give a shit about that, right? And it doesn't matter what your timeline is, and it makes it a lot more difficult. So I'm glad you brought that up, though. I think that's a luxury to have. If you do have it, I suggest you find a way to possibly have that luxury, meaning maybe you save some money, maybe you have, a job or business on the side, and you take a little slower approach towards things. But it's a huge asset to have when you don't have that added pressure on yourself.
Yeah. Yeah. I mean, and I think I think there's a misperception out there for people who are trying to sort of get to this point of being, full-time independent and professional traders. And they think that, well, I have to just make all of my money off of trading. And actually a lot of people who have longevity in this game have another source of income. They have something else coming in because it's just that pressure release valve. And especially in the beginning, it gives them exactly what you just said, the time to get themselves that critical amount of exposure, to get some reps in, to learn, how it works, give themselves a legit shot.
Here's the thing that I definitely want to share with a lot of people out there, because I think a lot of people get turned off by it. I mentioned it in one of the prior webinars. I think people get frustrated by it and they don't realize that they're making progress and they're on the right path. Okay. And I think it's because of like what we just spoke about, not having the luxury of seeing things clearly, because financially you need to be better. Okay. But a lot of people who start off in this game get frustrated by break even, right? We spoke about this a while ago, if you remember.
I think this is such an important point. Yeah. Go on. Sorry.
So in other words, they'll trade over a couple of weeks or the month, and they'll only make a little bit of money, and that frustrates them. You know what I mean? They look at it as it's a problem that's holding them back. Where, I disagree. Like, that's one thing I looked at as progress throughout my career is if I'm getting to break even, I'm there, right? I feel like I'm there. I just have to fine tune my edge a bit, right? To increase those profits. But if I'm hanging around that break even mark, I'm on the planet. You understand?
I got a seat at the table.
Yeah, exactly.
I have a shot. I have a shot.
Who are up 100 grand, down 50 grand, up 300, down $500,000. You know what I mean? Those are the people who never really going to have a grasp on what they do, because when a bad stretch comes, it can knock them out of the game, right?
Yep.
Those bad stretches end up becoming disasters, right?
Yeah.
Where when you're hanging around that break-even mark, my takeaway from it is there's discipline there. You understand? You're managing your bankroll properly. You're willing to take stabs. You're willing to take those losses, right? Now, you don't have that big bias where just because you're in a trade, it has to work, and you're willing to lose all your money because of it. So I think there's a lot more positive that comes out of break-even traders rather than, it's a lot of people get frustrated by it. They look like they're pissing away money because they hear all the other stories of how much this guy's up, how much that guy's up around them. You know what I mean?
Yeah.
But they never hear the other end of that story, Charlie. They're up now. They never hear when they're down, And
you're gaining so much if you're break even, but you're able to be there every day, try new things, learn something, see reps in the market. You're gaining something. You might not be winning, financial capital right away, but you're building mental capital. You're building knowledge about that's going to give you a shot to be in the right place at the right time and actually get significant upside. So I think that's a huge point.
You hit the nail on the head. If you're hovering around break even and you're noticing, some little mistakes you're making that have been costing you money, you correct those mistakes, right? You're only going to see some improvement there, right? And that's along the way, like you said, just being around and learning from your mistakes, you'll be able to eventually get over that hump. So that's one thing you shouldn't let drag you down in this game. It's something you should look at it as progress, in my opinion.
Yeah. I mean, Marcus just said market tuition. And like, if you're break even, you're basically getting free tuition. It's like you got a scholarship to, the education of the markets. Most people are paying a good bit of money to just try things, learn. They're going to lose that money. If you're breaking even, you're getting free education. Like that's huge. Yeah. Okay. Those are great points. Is there anything else when you look back at the brokerage, your time as a broker, that you say, those are concepts that I picked up then that I still, use to this day as a full-time professional trader.
Again, out of the brokerage business, it just, what helped me a lot was eventually it got to a point, as you guys know, some of you may be young, so I don't even know if you guys know this, but there was a big boiler room chop wave when I was just getting in the game. Luckily, I got lucky on this aspect too, timing, because if I was probably a year or two earlier, I would have got my hands dirty in that shit and probably had lawsuits all over the place like everybody else. And I probably wouldn't be in the game today. Okay. But I got lucky as far as the timing. As I got in, I wasn't even licensed yet. So I couldn't really get involved in that stuff. And as their world came crumbling around them through lawsuits and all that, SEC and all that, what I found was a whole other world out there. Okay. They were buying $5 stocks with $3 rips in them. Okay. I was looking at, wow, wait, if instead of doing that and parking my client money and worrying about lawsuits, I can buy, real names in the market. And if I make my clients money, I can take a piece of that. And that's how I'll generate commission. It forced me to really give it my all to try to make my clients money is what I'm getting at. Okay.
Yeah.
Where the chop stuff, you didn't care. You put your client money in that stock was going to zero. It was just a matter of when, but you took a nice chunk out of it. You know what I mean? You got your rip and you'll never see that money again. Okay. Me, I had to actually make my clients money to generate any sort of commission for me to make money. And I know like a lot of you look at that, well, yeah, of course, that wasn't like that when I got into the game. There was nobody.
That was not a foregone conclusion.
No, everybody was buying that chop shit. So again, it allowed me to look at the other aspects of the market and try to figure out how to make money in the market. So I experimented and just got involved and studied a lot of different things early on in my career. And like I said, learned more of what is not going to make me any money. There was no edge there, but really I could check off all the boxes of different things I explored until I finally figured something, I finally came across something that I really had the conviction in.
Yeah. So let's talk about that. I mean, when did every pro needs some sort of an edge, right? Some reason where they wake up and they say, I have an advantage in this market that other people don't. When did that become flow for you? How did that get on your radar? How did that come about?
Well, flow, when I got into the game, flow wasn't nearly as big, and now it just exploded. But back then, options, you couldn't really trade clients' money with options. You had to be accredited investor, they had to sign 6 different letters. It was considered the multi-millionaires gambling options were. You know what I mean? You couldn't just put any regular client in it. So I really didn't even look at options for quite a few years into the game. Okay. And I went through just normal things. Insider buying was something that really got my attention, right? Because think about it, I came from the professional gambling crowd. So I was always looking for, okay, who's the smart money in this game, right? So
what is that guy doing?
Right. Like that's kind of what was my hunt, my search for, where could I get access to what the smart money was doing? Because again, the way I looked at it was rather simple, that if I money manage properly, right? And, I control my bankroll, do what I got to do, except losing. Like that was a given. Okay. I think no matter what you're doing out there, that's the first thing you have to understand and conquer before you do anything else. You understand? I don't care what your edge is. If you can't manage your bankroll properly, you're a dead man or woman walking. There's no shot. Okay. Mm-hmm. So, and for obvious reasons, but the way I looked at it was that I'm a scratch player right now. And if I can find any sort of edge out there, right, any sort of edge to tilt the odds in my favor to the long side on anything I place a bet on, I would see it in my P&L and my client P&L, So there were little things along the way. Like I said, insider buying was something I really zoned in on. But then when I was introduced to flow, it was more of unusual options activity. Generally, I didn't find success instantly off of that. Same thing. I was mostly a scratch player, but I saw something within that where I can dig up an edge. And that's where, everything I do now today basically stems from. It's unusual options activity really was the drawer got me involved. Because again, same thesis, right? What's that unusual options activity? Oh, that's the in the know crowd, right? Why are they buying those calls? So that's what got my attention. But then I realized it wasn't as easy as that. And once I did a little more digging into that, that's where generally I stand today, finding, in what I do today. That was the draw.
So it wasn't some like overnight, on Monday, somebody was, hey, check out this unusual options activity thing. This is pretty crazy. And by Friday, you were making money using it. It was like, it was months of tinkering and trying. I wouldn't say it was an eternity, but I was really excited when I discovered unusual options activity. And, I was let down pretty quickly. And the reason why I was let down pretty quickly, there was no change into what I was doing already. It wasn't that it was a debacle. You know what I mean? It felt just random to me. You know what I mean? It felt random. But what I did was I studied a lot of the winners on the stuff that worked throughout the unusual options activity. And, that's where I found certain things that, I started to screen for and, getting better at it each and every time. And then I would apply, certain periods of the market with it. So like I explained to you earlier, it was basically a scratch player, then tinkering with the strategy to discover that little bit of edge to get in the plus column. You know what I mean? That's exactly how my approach went. And, to this day, I look at it the same way, right? When there's sweeper activity that gets me excited, I mean, that's what it's telling me. It's if I had a 50-50 shot of this stock going higher prior to that sweeper activity coming in, right? Now it tilts the odds even that much more in my favor. Right. It doesn't not a guaranteed thing.
Right. Yeah. It doesn't tilt them to 99.9%. But without a doubt, right? And I'm sure everybody in here who follows sweeper activity with me, sometimes more than others, but it definitely tilts the odds in some fashion. Okay. That's what an edge is. That's an edge. You know what I mean? An edge is not a crystal ball, right? An edge is something that takes a 50-50 probability and changes the odds in your favor, and you managing your money around it properly to become profitable. That's what it is. So that was my view. And I know it's not sexy. You know what I mean? I know there are people out there that are like, oh, God, 60-40, blah, 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 because they see, some of the money made in not only the market, we're talking about these fucking NFTs and shit and all this shit are, going around, but that stuff is not around forever. That stuff doesn't last. You know what I mean? And
rule of an efficient market, right? I mean, if somebody's making that much easy money off it, it's going to go away.
And it's the same, all the same rules apply. Like if you're not managing your bankroll around that stuff properly, you're going to end up in a body bag like many others when the music stops, right? It's not a question. It's just a matter of when, right? So no matter what you're doing, all those same rules apply, and you got to work on the discipline to stick with them.
Yeah. It's really interesting to hear you talk about, you starting to dig into flow and unusual options activity and stuff like that. I mean, it mirrors the way that Lucci worked with tape for a long time too. I mean, he would basically look, and we're going to talk about that in the fifth, go more into Lucci's journey with tape in the last interview in the series. But, he would go in the prop firm, he found like the two best traders, and he would look at their best trades, and then he would go at the tape. He would go look at the tape for what was happening in that name leading up to, during, and after that trade. And he would just rewind it over and over and over. And it was just him, looking at pattern recognition and saying like, okay, like what did he see here, and discerning cause and effect. And it sounds like you had a little bit of a similar process, just being like, okay, let's look at what works, what could have been causing that, and starting to, incrementally build up your sense of edge in that sense.
And a lot of even the more popular, successful strategies out there, like one that many know, like IBD, Investors Business Daily, was like, it's still big, but huge in the 90s. And, the reason why it was so popular, that's what it did. It took a study of all the biggest growth stock winners, right, throughout history, and found common characteristics in all of them before the stock exploded, right? So, a huge explosive growth, in a consolidation pattern, found very similar traits in every big winner before the stock really took off, and then just looks for those same characteristics in the market right now, and that's where it comes up with, its stocks. And it makes a ton of sense, right? Just like Lucci would look at the winners from a guy around him and trying to figure out why he was finding success. Same thing with me with flow, looking into the unusual activity. Why was certain order flow doing better than others? It's the same shit. But it's a very popular trait amongst successful strategies throughout history, if you look.
I'm sure y'all have. I've seen some questions in the chat, and some people put them in the Q&A. If y'all have questions for Jay, we're going to get into a Q&A section here in a second. So just put them in the Q&A section of Zoom. That way I can keep them straight from all the other stuff in the chat. Jay, you've probably talked a lot about this so far in talking about your own kind of journey. But when you look at the markets now and you think about what separates, retail sort of Riff Raff and pros, what do you think are the big differences right now? What separates the pros out there from
everybody else? There's only one difference all the time. There's only one difference. Everybody makes money when things are going up, when the market's going up, when the Fed is printing money, when we're in a rig game. Everybody makes money on the way up, okay? Mm-hmm. Some people are more fortunate. Some people get lucky. The thing they got involved in, goes up tenfold. Yours just went up twofold, whatever. There's a lot of luck involved in that, okay? The only difference between the Riff Raff, right, and the professional money is the professional money will pay a lot more attention to, all their attention to, in making sure they understand a way to holding on to a bulk of those profits, where the Riff Raff and retail would just keep going and thinking that this time will never end, and eventually give it all back and then some. You know what I mean? Mm-hmm. That's the only difference. The only difference. And again, that if you look around, like that's what anybody who talks about discipline, like for me, Ranchero, in this day and age, they look at us like we have six heads. Look at this guy. What's he talking about? Don't margin. Don't go to NFTs. This, that. I made this and this last month. They don't see the risk. They never see the risk. They're not looking at it from a big picture perspective. Well, they haven't experienced the risk yet. Right. You know what I mean? Right. Where if you're in the game like me over 20 years, you've seen this play out over and over. This has played out at least 5, 6, 7, 8 times already since I got into the game. Right. Some bigger than others, but I've seen the risk. I've seen people get annihilated and blow up around me. And I mean, people who were up huge amounts of money, huge. I'm talking about buying, Ferraris, condos, you name it, that you never thought they would be possible. They go broke, and they went broke. Because they never had any concern about the risk when the music stopped. And I think that's the biggest difference between, the smart money out there and the retail. I'll give an example. I get this a lot, right? we talk about something on the positioning side. We refer to them as Sharpies, okay? And the Riff Raff, which is the retail spec side, right? And a lot of times what will happen, these Sharpies, which they're referred to as commercial hedgers in the futures market, they'll go to a elevated hedged position early in a rally, okay? So what will happen is when the market's falling apart and everyone's running around with their hedge chopped off, these guys step in, they take off all their hedges, and they put on max risk, okay, when nobody wants to, okay? So they get that sweet spot entry near the lows and at the start of a rally. But as the rally materializes higher, right, and matures, they put back their hedges, okay? And what a lot of newer traders see, okay, is that, what are these guys doing? They put it on hedges? How do you call these guys smart money? Smart money. They missed out on another 10% upside, smart money. But you understand what they're doing? On the way up, they're putting back those hedges, because when that time comes, when the market rolls over and falls apart, the majority of their profits are hedged. You understand? Where the retail crowd is trying to milk every little penny of upside, they get caught at the top and they get destroyed, you know? So there's a perfect example of how the retail player approaches this game and how the sharp, quote unquote, sharp money approaches this game. You know, they're always thinking of the risk ahead of time. You know, they're always concerned with it. But that's the main takeaway. They're concerned about how much of these profits they want to hang on to, as opposed to how much more can we milk out of this thing.
Yeah. That's awesome. We're getting a good number of questions lined up here, so we're gonna jump to those. I'm gonna give a plug for the Master Course, which is the whole reason we're doing this series. The Sang Lucci Master Course is our flagship educational experience. It includes education with Wall Street Jesus. He will teach you the basics of flow trading, the fundamentals of how to do it in the Master Course as part of just 2 classes in the whole shebang. We're running a deal right now where we're getting $500 off the Master Course. It ends let's see, Thursday night. So it's only valid for September. So I think that's Thursday night, right? Yeah. What day is today? Tuesday? Yeah. Thursday night at midnight. It's no longer valid once we get into October. So I will put the code into the chat. It's September 2021 500. You guys can put that in if you go to sanglucci.com/MC, like MC for Master Course. And yeah, I mean, I've given a real good rundown of what the Master Course offers in our previous webinars, so I'll just do it real quick here. But there's basically no place on the planet where you can learn tape reading, equities and options trading, market structure, flow trading, trading psychology, plus specific strategies like trading the posts that Ron Friedman will teach you, who happens to be my next guest in this interview series next week, for $3,000. There's just no way that you can learn that. Learn everything like that from people like Jay, Lucci, Ronchero, Chris Cady. It's literally 100 years of trading experience that we're bringing to the table in terms of the educators in this course. It's an extremely strong program. We've been doing it for, it started out with Lucci teaching, 12 classes on his methods of trading options and tape reading. And now it's become 23 classes. It's still everything that we started with Lucci, but now it's trading the post with Ronchero. It's Wall Street Jesus teaching flow. It's Chris Cady teaching trading psychology. I mean, it's gotten to be a really robust experience. You get lifetime access to the recordings and future live sessions. So lifetime access, you pay once, you're a member for life, and you get 2 months free in the steam room with Jay, with Wall Street Jesus here, which is, $500 or $450 value right there. So again, the special ends at the end of this month. We highly suggest you take advantage of that. It applies to payment plans or to a single payment. You can learn more, sign up at sanglucci.com/MC. And let's take some questions. So there was one in here one in the chat. So Dylan asked, What's a good account size to be able to live off of as a main source of income for a while? I'm thinking 100K to 200K, but correct me if you see it differently. And this is, Jay, for context, this is someone who's been trading for around 3 years.
Yeah, I mean, if he's worried about that, I think that's without a doubt a sufficient place to start. I guess it all depends on what you got around you as far as bills are concerned, and everybody's different. So I can't give you an accurate answer without knowing anything about you. But from others I've seen, take a more professional route. That's without a doubt a sufficient start.
Mm-hmm. Yeah. And Dylan, like, listen, there are traders who have $100,000 accounts and they make 500 grand a year off those, and there's traders with $100,000 accounts and they make 20 grand a year. It's hard to give sort of generic prescriptions without more information. But if you're asking if that's enough, if that's a big enough account size for you to take a legit shot at doing this, absolutely.
Yeah, without a doubt.
100%.
Don't again, the main thing is that you're not looking, you got to get out of your head. You're trying to turn that 100 into 200 in 6 months. You know what I mean? Right. Exactly. Especially you're just starting, you want to work on that conviction, that confidence that you have something that works. You can always size up. You know what I mean? That's the easy part. You can always size up when you finally have that belief system in what you're doing. So you want to see, especially when you're putting money involved and you're taking a more serious approach initially, you want to make sure you feel comfortable enough and you have that confidence in what you're doing. Yeah.
Well said. What was the psychological difference for you between taking a hit with clients' money versus taking a hit with your own money?
Oh, I'll be honest with you. I know it sounds ridiculous, but losing client money just mentally was a lot more draining. The thought of coming in the next morning, okay, with futures down and fielding phone calls, you know what I mean, from clients. Anybody who's managed money knows exactly what I'm talking about, okay? So yeah, it wasn't at the start, okay, because eventually I was risking my own money alongside theirs. But at the start, when I was just trading with their money, basically, it still emotionally was almost the same, if not worse. So if you're asking the question, like, was it similar to trading my own money? It definitely was. Maybe I had to be even more conservative at times, but it really wasn't any much of a transition focusing on my own money, only because I kind of was doing both things right at the same time for a while before that transition. So it wasn't just a clean cut transition there.
Yeah, I think a lot of people who haven't been in either position think that trading with somebody else's money would be easier, because it's like, well, what does it matter? It doesn't, at the end of the day, it doesn't hit me, but it compounds it, because not only did you lose the money, but then you have relationships that you're maintaining. You have to answer to people whose money you lost. Trust me, I've had those conversations.
Charlie, can I give a quick story? I don't mean to cut you off. Just because before I even forget it, just a quick story. Okay, I'll give you an example, and you guys will definitely understand like how pissed off I had to be at this time, right? So 2008 rolls around, okay? And I kid you not, I bullshit none of you. You guys know that. 2008 rolls around, 2007, 2008. I'm in all cash for clients. Myself, all cash for clients, okay? Not one of my clients lost a penny off the 2008 drawdown. Not one penny, okay? And I'm proud of that, all right?
Right, but, as you should be.
Okay, but would you believe me if I tell you that I still lost a ton of clients, okay? One, because all the money they lost are away from me and everything else. They had to pull their accounts, okay? And some were just such big, they just wanted to play, right? They were on the sidelines for so long because of that 2008 debacle lasted forever, that being in cash aggravated them. They wanted me to try to figure out a way to make them money, even though I was telling them that you guys don't understand what's going on right now. You know what I mean?
Right.
There are major banks going out of business. You don't.
The system is at risk, literally.
Yeah.
Right.
But,
Yeah.
so that, right, you talk about frustration right there. It was almost like, go back and think about it. I was probably better off risking their money and trying to make some money, and generate commission, right? Because I was going to lose their account anyway. So, you got a lot of things like that go into play that can really drive you nuts when it comes to managing client money.
Yeah, because you're in sales, you're in client management, and you're trading, and you're managing money. I mean, there's a reason that hedge funds and anyone who's managing money has an entire department called investor relations. It's a full-time job. It's a pain in the ass.
Like, I'll give you an example. Okay. If I went into cash a couple months ago for clients, right, like I primarily did for myself, I've been in a high cash position for a while now, right? I've been, as you guys know, I've been really tactical. I haven't taken any swing positions on the option side. Okay. If I took that approach with clients and the market continued higher like it did up till now, forget it. ACATs would be coming whistling in every other day.
Right.
Clients would take their money. They wouldn't stand for that. I would have to sell them on that. And if they had another broker on the other line making money, talking about the money they're making,
Right.
So trust me, it's a disaster.
It's a pain in the ass.
Yeah.
Grass is always greener with that shit. Brian's asking, what is the best advice for somebody that's trying really hard and just isn't getting good at trading?
Okay, what's the definition of isn't getting good at it? See, I'm a big believer that this market will always, right? This game will always tell you what you're doing wrong. Okay. And it's up to you to fix it. Okay. Mm-hmm. If you are not sizing properly, if you're too big and you're getting too stressed out, you're stopping yourself out, or whatever the case may be, you will realize that. And it's up to you to correct. Okay. If you are buying stocks into the highs on green days and 2 days later you're getting shaken out, you will understand that you can't chase into 2 days strength and get stopped out when a normal pullback happens, right? You got to stop doing that. So the market will tell you what you are doing wrong, okay? And you're not going to fix it all at the same time, but by little, by fixing those mistakes, you should see improvement. So, your definition of, what was the word you used again? That
just not getting good at it.
Not getting good, meaning what? And there's, going back to the point, Charlie, I was making earlier about scratch player. You hear that constantly from scratch players. I'm just not getting good at it.
Yeah.
We're realizing they're there. They got to stick with it and do a couple things differently to get over that hump. But instead of seeing that, it frustrates them. You know, not getting good at it is if you're blowing up your account constantly. That's not getting good at it. If you're just not making enough money, but you're doing some of the other things right, that's getting better at it. That's not the opposite of what you're saying.
Yeah. Yeah. And, Brian, another thing, and obviously I'm going to say this, I'm incredibly biased, but if you're in seek out mentorship, seek out someone who can help you, give you some measure of guidance, some level of edge. Obviously, we got the master course, we have our services and our products, and we believe a lot in those. It doesn't have to be those. It could be, there's a lot of legitimate, communities and avenues to give yourself some sort of edge out there. But if you were just to say, I'm going to learn how to build a car, something of really significant complexity, and you were like, I'm just going to do this on my own. Yeah. Could you figure it out over a really long period of time watching free YouTube videos and stuff? Probably. Would you accelerate your learning curve and how quickly you could do it and how efficient you could do it by having some, a master mechanic come in and teach you how to do it? Yes. So, this, I think the history of this industry has been one of apprenticeship and mentorship and passing, things down to people who have earned the right to, learn some of these lessons. And I think that's part of what we're bringing. That's the service that the master course provides. That's what it is.
And sometimes it's the littlest thing that you get introduced to, or you discover, or you figure out that, just makes you see something you weren't seeing on your own and get you over that hump. You know what I mean? But you got to have, and I'm not saying you, Bri, but you got to have realistic expectations. You know, if you're saying to yourself, well, I'm not seeing 300% like these guys are telling me they're seeing, you know, like Tony was saying, you know, the grass is green, always green on the other side. You hear these stories, you can't pay attention to anything like that.
Right.
But you know, you got to have realistic expectations, and you know, sometimes it's the littlest thing that can get you over the hump.
Yep, for sure. David's asking, are you mainly focused on flow, or do you monitor the tape just as much for confirmation in your trades?
What my go-to is sweeper activity and sentiment. Those are the two I focus on. Sweeper activity basically is, it provides me my stock selection. Also that as far as the market's concerned, a trigger, kind of a confirmation indicator in a sense. And sentiment gives me the when, right? So those are the two I use personally. A lot of people use sentiment with tape reading. Those two work well together. Many people in the room use sweeper activity with tape reading. So again, it all depends, you know, on the person and what you're looking for, and things you see clear may not be as clearly as some others, you know. So everybody's different, but the two ingredients that are always involved for my high conviction plays are sentiment and sweeper activity.
Yeah, I mean, David, everybody, you know, our philosophy is we teach you the skill sets. We expose you to that. We teach you how to do it, and then you use what works for you. You know, Lucci is primarily reading tape, but he is absolutely listening to what Jay is calling out in terms of sentiment and flow to help calibrate his trades. Some people are really primarily only listening to what you know Jay's saying, or they're reading, you know, looking at the flow themselves, and maybe they're glancing at tape a little bit, maybe they're not. You know, there's on the spectrum of who's using what. It is all dictated by personality, by risk tolerance, by, you know, just kind of by what works for you. But we're gonna arm you with the skill sets. You're gonna know how to do these things, you know, and you can then choose what you want to do. All right, Jay, I think we can get you out on that one. Thank you for being here. Thank you everybody else for being here and asking great questions. Join us next week. We're gonna have Ranchero on here for the fourth episode in the series. And that'll be an awesome one. He's been fly fishing for the last 2 weeks, so he should be quite refreshed.
Is that what he's doing? Fly fishing?
Yeah, he took a nice little break. He needed a little break.
He? In Wyoming? Where is he?
I don't know, Montana or something like that. He's back.
There he is.
He's back.
Montana.
And
I love Montana.
To all you who are interested in the master course, seriously, sign up. Before the end of the month, you're $500 off. SEPT 2021 500 is the coupon code. It'll save you $500 on the course. Learn more at sanglucci.com/MC. And we'll see you guys next week. Thanks for being here.
Yep. Thanks for coming out, baby. See you later.
Thanks, Jay.
Later.